I've seen some data points on the Canadian and U.S. economies that suggest, of course, a strong rebound from the depths of the lows of the COVID-19 pandemic. But the question remains, what happens from here? In other words, what is the shape of this recovery? Avery Shenfeld is chief economist at CIBC Capital Markets. Avery, great to have you with us. And I just want to get your current thought on that, because, as we go along, we're going to get more hard data. We knew we were going to see a bounce, but I don't know about you. For me, things like the retail sales number bounce, which was so distinctly V-shaped, did make me pause and think maybe this won't be as bad as we thought. What's your current thinking about it?
Well, people do try to put these into letters, and V is not only for victory, but V is what you want to see in a recovery, because it means you went down steeply on one side and you've come back steeply on the other. And indeed, there are some monthly numbers that are giving that appearance, but at least for the US, I'm calling it a VW economy. And that's not Volkswagen. That's the fact that, although I do think the quarterly numbers will end up tracing out that sort of V, in other words, we went down a lot in terms of the average level of activity in Q2, and Q3 will be a lot better. I'm actually a bit fearful that the monthly numbers will end up tracing out a W, sort of where we went down from February to April, up from April then to June. And as you said, Amanda, it's been a bit more impressive in terms of how steeply that recovery has been in some of these indicators on the US in particular. But I'm afraid that the monthly numbers could actually tail off a little bit in the next few months, that we're seeing a resurgence in COVID cases. That's going to require the reimposition of some of the restraints, either by governments or just individuals becoming more cautious. And that's part of the story. And I'm also a bit fearful that some of the recent numbers are a bit exaggerated. If you wanted to buy a car in April, but you didn't want to leave your house, and you bought it instead in June, then June is going to benefit, for example, from having combined a few months of car sales, a few months of other durable goods purchases, even houses, into a single month.
We look at so many charts, and it's true, it's less true these days of stocks, but many of the charts, including employment, I guess oil would be the one that I think of as the most like this, where we can see what normal was. We could see where we were in January and February, and for oil, that was $60. So, even as we sit here at 40, we're not back to normal. We're starting to get reopening, Avery, and this is what we've been waiting for. We knew that there was going to be a staged-in reopening and that it wouldn't go right back to normal, the way you sometimes get post-recession. But let's factor in, and this is kind of a tough one, I realize, but for you economists, the resurgence in the number of COVID cases, what we're seeing in Alberta, what we're seeing in BC. How do we factor in the fact that we're going to see some stuttering and people refusing to go more than we even thought or feared?
I think the lesson in what we're seeing, to a little bit in Canada, of course, much more in the US, but also mirrored in places like Japan, Australia, where they're actually seeing a true second wave in those countries, is that you can only go so far in terms of your ability to reopen before you just simply encourage a setback. And, it is questionable, for example, whether we can simultaneously open things like schools, dining indoors, bars indoors, without triggering second waves that cause us to have to give up some of those things again. And certainly what the data are suggesting to me are we can't have it all ways, that we're going to have to hold back on some things to allow the underlying level of cases to be low enough that you could, for example, have some students back at school without almost inevitably triggering a large wave. So the lesson here is that yes, there was some low-hanging fruit, things that we could easily do that we weren't doing back in April. Playing golf, for example, eating on a patio at a distance. I mean, those are things that the weather helped too, but they were also not so risky things. The problem is we've picked that low-hanging fruit, and the parts of the economy that are still pretty much shut down, nightclubs, a lot of airline travel, convention centers, those don't look likely to return anytime soon. So what you see in the year-over-year data, for example, is, yes, we made good progress, but there's still an awfully large hole in the economy. And it's a hole pretty much as big as you would normally see at the height of a recession. So we still have a long way to go, as you mentioned, in oil. But I would add to that just total employment still has a long way to go.
So in that context, we've begun to hear talk from governments about how to change the support in place. There've been a lot of talk all along here about a universal income, which is an old idea. It's one that's been kind of road tested in various jurisdictions as pilot programs. But given that this may go on a lot longer than we thought, and that hole you described may be more structural than we thought, at least for a while, do you think it's an idea whose time has really come?
So I'm not as big a fan of it as some, and it's not because I don't have sympathy for the people who have lost jobs. And indeed, I think that we need to fashion some sort of support, not only for the people who qualify for unemployment benefits, but for the self-employed for quite a while to come, because you hear this accusation, oh, these people are slackers, there's jobs out there. Actually, the number of unfilled jobs in the US and Canada isn't close to the number of people who are unemployed. So even if every one of those jobs was filled, there'd still be a lot of people needing assistance. The problem with the universal basic income concept is that it looks very simple. Everyone gets a check, everyone gets the same amount. Maybe you tax away half of it back as incomes rise above a certain level, but it's sort of a no fuss, no muss, very simple approach. The problem is that the current social welfare systems we've built up, things like unemployment benefits, aid to families with children, disability benefits, yes, they're complex, but they're complex for a reason. They enable us to give a lot of money to people who can't get a job or who, for various reasons, would be permanently unable to work without creating disincentives for people who could work. And the problem with a universal basic income is it doesn't have that feature. If it's generous, it will, when good times come, start to create a problem with people simply choosing not to work. And if it's not generous, then it's not providing enough support for those people I mentioned earlier who can't work or truly can't find a job. And I think that a more customized approach, which is really what we have, actually works better than the simple everybody gets a check approach.
Fair enough. I mean, in the meantime, we may well see a kind of a continuously evolving CIRB as the situation changes. Does that make sense to you, rather than going back to our traditional mechanisms, to keep that in place but change the rules a little bit as we go?
I think we're going to need some type of CIRB, and they'll probably make it a little less crude than the one we had. That is a little more flexible in terms of earning some income beyond $1,000 without completely losing $2,000 in benefits, but also perhaps tying the payments a little more to what you had previously earned before, or making it taxed back if you earn a certain amount. That wasn't possible when we first launched it. The time was of the essence when they designed these programs, and they needed to get checks out in a hurry. I fully understood that. But we're going to now, we've had some elapsed time, and I think the government is working on something in that. So the people who would have qualified for unemployment benefits, which are tied to your previous income and you have to show you're looking for work, they're going to be rolled over soon into regular unemployment benefits. We will probably need something for the people who were self-employed. And the US is essentially trying to wrestle with the same thing. There's some big differences of opinion now between the Republicans who don't want to be as generous and the Democrats who want to continue some of these larger federal benefits for the unemployed. And hopefully they'll come down somewhere in the middle here, at least, where they don't cut too many people off cold turkey and find the economy sagging as a result.
All right, Avery, great to have your thoughts on all of this. Appreciate it. Avery Shenfeld is chief economist at CIBC Capital Markets.